And we're live. Happy Wednesday, everyone, and welcome to the Mojo Show, your real estate podcast where we talk about everything real estate. I'm your host, Joe Mortgage.
And I'm Cup of Joe Mortgage.
This week's episode, we're exploring current market dynamics and helping you buyers understand whether the power is shifting in your favor or not quite yet, especially as interest rates show signs of easing and home inventory shifts in certain markets. Buyers out there are wondering if they finally have the upper hand. So in this episode, we want to break down for you what a buyer's market really is, what signs to look for, and how buyers should really play the game right now. But before we get to that, little coffee talk with the Joes this morning, as always. Joe, I want to ask, I know this is an awful wall question, kind of different from a lot of
things. You didn't set me up for it today.
No, I didn't. So this one I know you're not expecting, but because usually we talk about some different personal stuff and that's going on in our lives, your kids and so on, or golf or sports or something. But this one's going to be a little different because I was thinking about this the other day when I was doing something, and I'll play into it a little. But have you ever bought something and afterwards you either regretted buying, making that purchase, or I'll set up a second one for you as a fallback, right? So have you ever bought something that you really negotiated big time and got a good price on?
Oh yeah, those two different things, right?
Right.
So I'll go with the negotiating first. The negotiating part was when we moved back to Texas. Tina and I were trying to find a place to live and everything else, and we were in a small little rent house, and then there was this 9-acre kind of farmhouse, 9 acres with a farmhouse that was built in like 73. That's never been remodeled on it, right? And the people that owned it were a little older. And so my negotiating powers was kind of going to them. We kind of went back and forth, and we got them to owner finance the house without having to deal with anything else. And we went, and it was a true like purchase deed. They were just a lien holder. We were the owners and stuff like that. I would say that was probably one of my best negotiating powers, is to go in and do that, because it was at a time where it just made sense for us. And at that time we were thinking of leaving Chase and starting up LHM Financial and doing all. That's how the team and everybody we got over at NXT now, we all met. But that was probably one of the best negotiating things that I've ever done from that standpoint. What is yours from a negotiating standpoint?
Not as big as yours. Not as big as yours. And that's what kind of brought this to my mind the other day when I got home from the gym, and I always like to make a protein shake. So I have this Ninja blender, right? We've all seen them, these Ninja blenders, right? They have
we have the ice cream maker one.
Do you really? You and I got to talk about that, because
I'll let you talk with Tina about that one.
Oh, okay. So the Ninja blenders, I mean, they can be a little expensive, right? And I think at the time, way back when I bought this, boy, how long ago was that? I mean, this has got to be like 7 years ago or something like that, right? That it was like $150, right? And I ended up getting it for $50.
Oh, okay. How'd you do that one?
So it was I want to say during the holidays, right? And they had a 50% off sale. So that took it down to $75. And then when I walked in, because that's what I was planning on buying, us guys, we got a one-track mind, right? We go into a store, we know what we're buying, we get it, and we leave, right?
Right.
So I go to walk in, and of course they're handing these little cards out to everybody as they're walking in. So I took one politely, and come to find out it was a $25 gift card.
Oh,
you kind of do like a scratch off, and it tells you what you want, right? And it was $25. I was like, sweet, right? So then, went from 150 down to 75, down to 50, and walked out the door with it. So I don't know if that's good negotiating skills, but that was a good.
It's a good deal. One or the other, right? It was a great deal. That's awesome. That's awesome. Well, today's show, I know, guys, the people that are listening and are tuning in, we're what Joe said in the beginning. We're going to talk about buyer's market, and kind of seller's market too. Kind of they go together. But we want questions, we want comments. Honestly, Joe, I was scrolling Facebook this morning, kind
Yeah.
of just doing my invites and all that stuff, and one of my friends and previous coworkers, Leo Timmons, he's still in the industry, is Timmons Group. Does great job as a loan originator, and but I was reading his post today, and it was about it's a buyer's market, and it was just
Really?
because we come up with these episodes, and like yesterday we were talking about what we wanted to do today,
Yep.
and I didn't research or anything like that, and we came up with this episode. Well, his post kind of laid out a lot of the things that we're going to talk about today about why
Awesome.
is it a buyer's market, what has changed, and things like that. And it was kind of interesting. So I put a post on there. I'm hoping he chimes in today. I put a comment on his saying, "Hey, we're doing this on our podcast today at 9, so please log on and try to share." So Leo, if you start listening, please put a comment out there, because your views on what the market is right now was amazing, because it's the same views that I had or I have when it
Mhm.
comes to this. So I'm kind of interested
Awesome.
for you and I, Joe, to get into today,
Good.
because of that. So I know, if you're listening, please make comments, ask questions when we're going through this,
Please.
because today it's just Joe and I talking again, and today it's just bringing some insight about what's going on, not just in your area, but across the country too, because
Mhm.
we deal with a bunch of loan originators that work for us throughout the country, and they're seeing some of these same signs.
Right.
So I know you had a two-part question there, but I think we both answered the one part.
I
Uh,
think so.
and
But
and if you're listening and you had a great negotiating thing, please put that in the comments. We want to hear what you guys have. It's not just about Joe and I talking here. So
and it correlates, I think, with what we're talking about today, as far as whether buyers are finally in the position today in the housing market to get a good deal or
yeah.
not.
Well, like
And
like I shared, on my negotiating when I bought that farmhouse,
mhm,
this kind of goes into a buyer's market.
mhm,
When you have enough inventory setting on there for more than 45 to 60 days, you start getting sellers that start kind of wondering, should I drop my price? Is my price too high?
mhm,
And one thing in a buyer's market that people start seeing is they start seeing people reducing prices, from a seller standpoint. And I know this is kind of off topic, but it kind of goes with what our first part was. And so right now we're seeing that starting to come up. And it's not that we're adding a ton of inventory. It's just that with the inventory that we have on there, they're setting for a little longer. And when sellers get nervous about setting, they're thinking, okay, I have another mortgage payment coming up. I want to buy a different house, or I've got to move. So that leads people into negotiating better. And
mhm.
that's truly what makes a buyer's market, is the negotiating part,
Okay.
in my opinion, right? And so like when I did that, and that was in 2013. So, no, we were coming out of the housing
Right.
crash and all that stuff, about 3 years out of it. And so I just started talking with the owners of the place, and kind of talked with their listing agent. We were talking about business and things like that. And if it was not a buyer's market, then that negotiating is not happening,
Hmm.
because the sellers are like, hey, we've had this house on the market, and, it's a little outdated and things like that. And it was tucked away where nobody could see it.
Mhm.
And so that's why that negotiating worked, because it was a buyer's market at the time in 2012, in 2013, when we were doing
Do you think that a difference between a buyer's market and a seller's market has anything to do with how long a home sits on the market?
it. Yes. And, I'm going to say yes on that one. And the reason I say that is because in a buyer's market, it's about, what can I get to help me buy this house? Can I get seller concessions to offset my closing costs?
Okay.
Will they come down on price? Because guess what? With the rates where they're at today, I really need to be that at 400. You're asking 425 or 430. People are making that decision about $25,000 in some cases.
Right.
But one of the things that's very huge is buyer and seller markets depend on the location.
True. That was very
You
true.
know, you were pulling numbers earlier. What were the numbers you were pulling down in your area on the
Yeah.
statistics? Because you're a fact finding guy, and so let's talk about some of those too.
So I tried to pull it for just the Woodlands area, and it wasn't. I guess I'm not tech savvy enough to figure it out of how to have it just pull for the Woodlands. But so it's really pulling for Houston, the Woodlands, Sugarland. I mean, just the encompassing metropolitan area, if you will, of Houston. It's actually stating that median days to pending, right, from listing to pending is 31 days,
Okay, but
which
that's
kind
from
of
pending.
surprises me.
Yeah, but you're looking at a different statistic there, right? But you're looking from when they list it to when it goes pending, so they finally got a
Mhm.
contract. Where
Mhm.
before we were looking at 30 days of closing because it was off the market completely.
Mm.
So 31 days from listing to pending is still a longer time, but that's still a really good area. So Woodlands might not be a true buyer's market.
Right.
It depends on what the inventory is then at that piece, right? Because if they're still low on inventory, because people, the Woodlands is a very nice area, and
But
it's typically not your first time buyer homes
right.
and things like that for the majority of them. So these people are going to probably not list as quick. So in the Woodlands area, I would say you might not be a true buyer's market, but I still don't think you're a true seller's market either. You're kind of that hybrid in between, and it's
Yeah.
just going to depend on what qualities and amenities does that home have in that area when you're making that bid. So your negotiating power might be a little less, but like up in the DFW area, right? Same things in pockets around the Frisco area and around certain areas around the Dallas Fort Worth area. But if you get out in the outskirts in Denton and Hazlet, kind of all that stuff on the outskirts of the metroplex, you're starting to see some of those homes and the amount of homes go on the market. That's helping with that negotiating power.
Mhm.
Because I was talking with Justin Huff, right? Huff
Yep.
down in Victoria. I was talking to him yesterday, and we were kind of just going through some seller concessions and things like that. And he has, been coaching his agents and his buyers on, hey, go in at the full price, ask for the seller concessions versus trying to go in with a lower price because it's going to save you like 25 bucks on your payment. But, you know, 6% on an FHA loan of 200,000, you're looking at a good chunk of closing costs and help buy down the interest rate or do a 2-1 buy down
Mhm.
that we've talked about in the previous episodes. So
Mhm.
that's what makes it more of a buyer's market, in my opinion, in his area. Because if you're able to negotiate those in, even at just list price and not trying to go over, and things like that, that in my opinion makes it more of a buyer's market down there.
So,
So, I mean,
yeah.
what are you seeing? I mean, you're in Montgomery, you're in the
Mhm.
Woodland area and stuff like that. So, outside of just the statistics, what are you seeing with or hearing from your real estate agents when it comes to inventory and negotiating powers right now?
It's actually a mixed bag. And that's why I feel strongly like you that it's not necessarily a buyer's market and we're not necessarily in a seller's market, right? I mean, it's almost like not just the area or region, but it's almost by the home,
Mhm.
right? Is whether or not you're going to get, the full asking price, or as a buyer, you're going to get, negotiation of lower or seller concessions or anything. It's because I mean I've got a friend that has their house on the market right now. I think it's been on for what, 6 weeks now, something like that. A lot of showings, a lot of great showings, right? But no offers yet. Now they have dropped the price on it, right? We'll have to see where that goes. But then there's those on the other side, the buyer side, with some of my clients. They put, I can think of two of them right off the bat. They put an offer in and boom, it was accepted. I can think of another one that they put a lower offer in, right? And it was rejected, right? So it's a mixed bag.
It is. And I think what you're going to see there is price range is a big for me that I'm seeing right now. We have people that are buying in that 1.5 million, 2 million range. That's not going to be as affected as much from a buyer standpoint because you're going in luxury, but from a selling standpoint, those houses are setting a lot longer.
Right.
So I'm seeing that, but in the you
Like
know
300,
second
400
second
range.
homes second homes where you're in that 450, 475 to
Mhm.
600,000. And it's really sad that we call that second, kind of the step up from a starter home now, because 450 to 600,
Uh,
that was like, hey, that's my dream home type thing
right,
when we
right.
started buying houses. But you're seeing a shift that way too. But the price range you're talking about, that 350, that 300, I'm seeing some of those get negotiated better, and I think
Mhm.
some of the reason for that is because the investors that were out there buying up those first-time homes and stuff like that, they're starting to struggle with how much rent people are willing to pay. And
True.
the DSCR loans, which are awesome, but they're only awesome if you can cover your payment with the
Right.
rent. And with the rates at 8%, 8.25. I mean, yeah, we can get them in the sevens on some of the DSCRs, but you're in the high sevens. You
Mhm.
start outrunning the rents in those areas. So that's what I start seeing, that this is becoming more of a buyer's kind of market, to where you're a true home buyer, not just an investor. So that's what I'm seeing on that one. But when it comes to the negotiations on your contracts and stuff like that, what are you seeing in those negotiations, or they're asking for, that they weren't asking for, let's say, a year ago?
And actually, I'm really not seeing. I think I want to say probably one out of the last 10 were their seller concessions,
Okay,
right?
so you're not getting a lot of them with seller
No,
concessions in your area.
I think if anything, what I'm probably seeing a little bit more of is a lower purchase price than the list price.
Okay.
Not a lot, but some, right?
Well,
Uh,
you pulled a statistic on that earlier too, on the amount
oh
of
yeah,
homes that sold over or under list price. Kind of share that information that you're
yeah.
you're seeing
So
too.
so this number again is coming in from Houston and metropolitan area of Houston all around, if you will, and it's stating from March 31st of this year. So what's that? April, May. So about 2.5 months ago, we're seeing 13.3% of sales over list price, and then
That's got to be down from what it was, because most of them were hitting at list price or above for a long time.
And then those, as far as a percentage of sales under list price since March 31st, 2.5 months ago, is 67.1%.
Oh wow!
So,
So more
they're
than
under
half.
list. Yeah, under
Okay.
the list price. So, um, yeah, but then again, and that's why it's kind of a mixed bag, as I keep saying, I realize, but because you've got that high percentage, 67% under list price, but 31 median days to
Right.
pending. So, but not very long on the market, right? So, I mean, if that was longer, I think if that was more around 45 days, maybe 60 days, maybe we would see more of a sign of a buyer's market,
Yeah.
you know. But 31 days, I'm kind of that's good as far as
No, I think that, I've kind of looked at, like, I'm doing some loans up in Nebraska now, and we are starting to see up here too that people are taking a little bit more time to put in an offer.
mm,
So that is one thing that I I think buyers. Sorry, I'm trying to go through my head with my thoughts here. I think buyers right now, they're taking more time to find that house, and this kind of
mhm,
leads to, you know, our next thing that I wanted to talk about today is, if you're waiting for that perfect home,
mm,
you're missing out on things, because that's why this is a buyer's market right now. Is once rates drop, if rates right now, I mean, if we're doing an FHA loan, I'm in the mid to high sixes, right?
mhm,
Depending on how many discount, if you're wanting to pay discount points or not. And on conventional, I'm in the very high sixes to,
low
I would
seven.
say, yeah, low sevens.
Mhm,
So once that changes, and say those conventional deals are, in the mid sixes to low sixes, you're going to see a bunch of buyers that all of a sudden want to make offers, and you're not going to see a whole added amount of inventory.
Mhm.
So if you wait for those rates right now to drop, you're now going to miss that buyer's market to get into a house that you can have some negotiating power.
Right.
That's my thought on it. What is your thought on, when it comes to right now, the being a buyer's market, what slight change could change this to where now all of a sudden you're trying to make offers and there's 10 other people making the same offer or higher offers, and then that 67% under list price is now 67% over list price. So kind of what are your
And
thoughts on that?
I think you hit the head of the nail, Joe. If and Grant, we've been saying if and when interest rates drop, right, for
For
the
three
past
years.
3 years, right? Right. No, third quarter in the fall, we're going to see the, stat history of numbers show that blah blah blah, and we've been waiting, and it still hasn't. And I told a realtor the other day, I said, I'm done with all of that. I've been done with it, and this is where we are. If it's 7% for a conventional, mortgage, that's where you are, bottom line,
Yep.
and that's where we're going to be, right? Just get used to it. Even though everybody got used to their 2 or 3% interest rates, sorry, but here's where we are, and this is where we're going to be. If for some odd reason interest rates drop, okay, great, take advantage of it, right? But for now, buy the home,
Yep.
because all that's going to happen a year from now, 2 years from now, 3 years, or whatever it is that you want to wait, the price is just going to keep going up.
Yeah.
So if you
And
buy it now, you're going to lock in that purchase price, and the interest rates, well, we'll just change it as rates change.
yeah, and that's one thing people need to understand about it is the negotiating power right now. If you can get, depending on the size of the home, but if you're buying a 350 to $400,000 house, and we can get, let's say 2% towards closing cost in that, you could look at possibly doing a 1-1 buy down, temporary rate buy down, or a 2-0 temporary rate buy down, or 2-1
Right.
temporary rate buy down, excuse me. Then, what that does, and we've had an episode on the temporary rate buy downs, right? But
Yep.
in a buyer's market, this is where those things can really help you.
Mhm.
And if you can get enough seller concessions to do one of those temporary rate buy downs, well, guess what? You're betting on in 2 years that we can hopefully refinance you at at the second rate of the temporary
Mhm.
rate buy down. That's kind of the way that I tell clients is if
Right.
your qualifying rate today is 7% on a 2-1 buy down, that first year you're at 5%, that second
Mhm.
year at 6%. So what we're trying to do is we're trying to refinance you at that 6% or less,
Mhm. And
in
within
that
2
time
years.
period.
Yeah,
But
absolutely.
that's one way that in the market today, you can get that money. In a
Mhm.
market when the rates go down to 6.5 to 6 on a conventional deal, there's going to be a lot of negotiating power that's going to be taken away from you. So
Mhm.
that's why I'm saying today is a buyer's market. Get out there, start, talking with the professionals, reach out to Joe and I, and let's figure out what can you get pre-approved for, and how can we help your real estate agent negotiate
Mhm.
based on that to get some seller concessions. And if you're not needing it to just lower the amount of money that you're coming out of pocket, we can use that to lower your payments on a monthly basis.
So there's definitely in the negotiation, what Joe is saying, there's definitely different ways that we can use this to put you in a better financial position than just lowering your interest rate, right?
Yep.
Whether, looking at a permanent buy down of your interest rate, a temporary buy down, to get things fixed in the home, lowering the actual purchase price. I mean, there's a lot of different ways to negotiate. And your key, I will tell everyone, I know, Joe, you'll say the same. The key is working with a team. When I say a
Yep.
team, I mean, yes, your realtor, absolutely, because they're going to do the negotiation, but working with a team that is your mortgage person and your realtor together. Because when that is combined together, you have a great power in negotiating and getting what is going to put you in the best financial position.
Yeah. Yeah, no, and that's the key about it is that team. I mean, I talk to listing agents every time we're making an offer, or I'd send a video. And a lot of times I'll put in there, hey, we need this to make sure that this
Mhm.
goes through when it comes to seller concessions and things like that. I feel like right now, it's the summertime. And people are all getting in that lull of, oh, I want to get through the summer and then I'll figure out. Well, there's people out there that are like, okay, I want to move my kids to a different school district. I want to do this.
Mm-hmm.
So the longer you wait, the likelihood of the negotiating could be hindered.
Taken away. Yeah.
Right.
Yeah.
I mean, today the inflation report came out, right?
Yeah.
And it came out lower than what was expected, which honestly, it's helped the market today in the pricing for interest rates. I'm not saying it's going to swing the needle, but at least it's given us a little relief, because the last 3 weeks have not given us any relief, even with the numbers being out. And we have great business partner in Nash Paradise. If you ever catch his Monday morning market updates on their YouTube channel, him and Matt Gouget, I mean, I was listening to it this week, and the inflation report that came out, the anticipation was, we don't know if it's actually going to change the market, because the jobs reports that came out last week that should have helped us didn't.
Yeah.
And so
for one day, and that was it. And I got a feeling the CPI report today, it's going to help us one day. It's going to knee-jerk reaction. Tomorrow it's going to go back up, right? I mean, it's
or later today, it's going to just level out.
Change, right? And that's something people. I'm sidestepping here, Joe. That's something I want everybody to understand with interest rates. Yes, typically interest rates are fluctuate according to inflation. Okay, but also understand that interest rates change like 2-3 times a day. Okay. It's whatever the interest rate you were told last Friday, today it's different. Please, I don't care where you go, it's going to be different, right?
Unless they locked you in. And the only way they can lock you in, now there are some that you can lock and buy. So people will be like, oh, we have this lock and buy program. In a low interest rate market, I'd say the lock and buy is good, because you're having to put money out there and you're secured. In our market today, the difference between a 6.875 and a 7.125 in cost or in payments is not going to make or break you a lot of times,
$15-$20 a month.
Well, I mean, for about that, it might be a little higher depending on the purchase price and the loan amount. But at the end of it, paying up front for something like that doesn't make sense to me in this market, because you can negotiate to try to get the temporary rate buy down. So in my personal opinion, I think we're in a buyer's market in a lot of areas. But we need buyers now to go out there and understand that, okay, we can negotiate better now. We can get a house. We can look at what kind of financing options that can we do to short-term save you money with the seller paying for it. And then that money's not lost. So that's the big part about, if you can get money from the seller, it's not yours, but it's saving you on a monthly payment.
Yep.
So,
well, as we start to wrap things up, let's cover a couple of pro tips with everyone, Joe. Whether you're in a buyer's market or a seller's market, I think these will hit home and be advantageous for everyone. Make your offer stand out, right? Bottom line, even if the seller isn't desperate. Some sellers are, because they're moving, right? They're getting transferred or something, right? So maybe they're desperate, or there's a divorce and they need to get it settled within the next 30 to 45 days. So if they're not in that position, if they're not desperate, make your offer stand out. In doing so, work with your lender and realtor together. As Joe's been talking about, to be able to negotiate and put your offer in. Maybe it's not a matter of, excuse me, coming in with an offer 20 grand less than the list price. Maybe it's a little bit less or matching the list price, but with concessions, right? So it's how that offer is positioned and standing out.
Yeah. So when you say make your offer stand out, this cracks me up, because I've got a good friend and a loyal, let's not say loyal. I have a relationship with a client that, we've done, I think, 4 or 5 loans. I'm doing her son's loan right now. I've helped one of her tenants buy one of her rental properties. She cracks me up every time she makes an offer, Joe. It's like, no, I want to make $324,123. She does it every time, something just like that. And I'm like, why do you do that? And she goes, well, it stands out, doesn't it? I was like, well, that's true. It was something that she's done. And every offer, we've done 4 homes now. And every time it's something like, she's gotten passed up on a couple, but it works a lot of the times. And it just cracks me up the way she does it.
Take
So,
that note, everyone.
yes.
Take note of that.
And
That's
I'm
a
going to
good
give her a shout out. She listens every once in a while. Jennifer Kennedy. She's a wonderful person, great landlord, great investment person when it comes to that. And we're going to have her on one of our shows to talk about how she does her portfolio buying.
Oh,
So,
that would be wonderful. We'd love to have her on.
yeah.
Absolutely. Another pro tip, and then we'll wrap things up, is be pre-approved and ready to move quickly when the opportunity strikes. Too many times, like Joe was saying, that's, if you're waiting and waiting, especially for that perfect home, you're losing negotiation power pretty much most in a lot of situations. Get ready, be pre-approved and ready to strike, right? Don't wait to find the perfect home and then get pre-approved, because depending upon who you deal with, it may not, you may not get pre-approved that same day, right? So make sure that all your ducks are in a row. We've talked about getting pre-approved before. That's your golden ticket, right? And you don't want to, it's the same thing if you go to the mall and you don't have a money or credit card. Well, why are you going to the mall anyways, right? I mean, get that golden ticket, that Willy Wonka golden ticket.
Very true.
If you're ready.
Great pro tips there.
Well, that's all the time we have for today's show. So are we in a buyer's market? Well, in some ways we are. In others, no, we're not. But buyers definitely have more room to negotiate than they did 12 to 24 months ago. I think both Joe and I can agree to that. If you're wondering what your local market looks like and how to play it smart, reach out to the Joes. Our email addresses, Joe, will pop up here. Feel free to reach out to us. We'll give you the tools to act with confidence, pre-approvals, and the right realtor partner as well. Tune in next week at our usual time, Wednesday, 9 a.m. Central Time, as we begin our next series on utilizing your home's equity, as we explore different financial reasons to tap into your equity, but more importantly, the right way to do it. Want to thank everyone for listening in today's show. If you missed any of it or want to catch up on some of the past episodes, go to our YouTube channel at The Mojo Show Real Estate Podcast on YouTube. And while you're there, hit the subscribe button because we are on a mission to get to 1,000 subscribers. And of course, every like, comment, and share helps us reach more home buyers just like you. Before we close things out, Joe, any last words of wisdom or nuggets of advice for our listeners?
I'm going to ask the question, what shows would you guys like us to talk about? Or what are some topics that you would like for us to share? Or is there any past episodes you want us to go back and touch on? Please put that in comments. And if you're watching this, on the recordings or anything like that, please let us know. You can email us that, or you can email it to our Mojo Show at real estate podcast at gmail.com. We want to know if there's something that is like, hey, I really want to know more about this. Let Joe and I know, and we'll try to make a show of it for you.
I love that. That's good stuff, Joe. Well, I am Joe Mortgage, and that handsome guy with the beard is Cup of Joe Mortgage, and we'll see you next week. Mr.